Hi, I'm Andy Brough and I'm the fund manager of the Schroder UK Mid 250 Fund. I'm here today to talk about what's happened in the last year and what we think is going to happen in the future. The FTSE 250 is one of the main indices in the London market. You have the FTSE 100, which is the top 100 companies, and then the FTSE 250 is effectively the next 250 companies after that. And in Schroders, we kind of call the 250 index the Heineken index because it gets refreshed like no other. Since I've been running this fund since 1999, there's been a huge number of changes to that index, and you're always capturing those companies which are coming up from small cap land or those companies which are falling down and reinventing themselves. So it's a very attractive place to invest. Well, if we look back 12 months, we were just coming out of the Brexit vote, and just before the 30th of June last year, all domestic stocks, principally where a lot of mid 250 companies are, had a pretty torrid time. And most commentators expected that the UK economy would actually participate in a recession and trading for companies would become incredibly tough, and they sold off the shares. But what's happened then is a year later, and here we are with the FTSE 250 virtually at an all-time high. The fund's outperformed during that period, and we've seen a very strong bounce back in domestic stocks. And by domestic stocks, I mean companies like house builders, because amazingly, there's been still very strong demand for housing. We're still not building enough houses. And the UK consumer, although it's hit a bit of a tricky patch recently, has been pretty resilient. In addition, the weakness of sterling has made our exports far more attractive to overseas markets. So we're seeing very strong growth, and maybe we're seeing the rebalancing of the UK economy that so many commentators have looked for. And because sterling has been weak, then that means that UK companies are a lot more attractive to overseas bidders. And one of the big factors in mid 250 land is the level of corporate activity and the realisation of profits as companies are taken over. And during the period, we've seen the bid for WS Atkins and Market Tech, just two to mention, at substantial premiums to the trailing share prices. But what about the future? Because what drives share prices? Well, share prices really are dependent on future dividend increases from future earnings increases. And as we see more and more pressure on large companies coming under threat from the internet and increasing global competition, be it in tobacco, be it in banking, so we're seeing the emergence of a lot of sort of mid-cap companies which have been developed and growing very rapidly to capture that space. And one thing we focus on a lot is what is the rate of dividend growth, because that's what people are looking at when they're looking at their statements, just not the capital growth, but it's the income growth that they tend to go and spend. And we're continuing to see double-digit dividend growth. So looking forward, we're optimistic about mid-cap land. Valuations are still attractive, but more importantly, the growth opportunities in mid-cap stocks is far superior to a lot of the very large companies which are going to struggle from the competition that's coming from the small and nimble operators. The internet has enabled companies to grow very rapidly and dominate markets and challenge the incumbents in that space. Mid-cap and small-cap to a degree companies have that very significant competitive advantage and the ability to grow very quickly, so providing superior returns to unit holders.